All right. Thanks again, everyone, for being here and taking the time to join me today. We are going to get officially started right now. People are still coming into the room. If you are new to GoToWebinar or to one of our webcasts, you'll see a control panel here for GoToWebinar. If it's closed down, just go ahead and click that orange box and it will give you the chat box where you can type in any questions, comments, concerns, whatever you'd like to do in there. That'll be open for you. So as we get officially started, I want to thank you all again for taking the time to be here. This webinar is titled The Options JumpStarter, a beginner's guide to profitable options trading. And I know more people are coming in the room, and I had asked a few minutes ago, and it looks like the majority of the folks in here are brand new to options, which is great. I love that because it allows me to help build a foundation for you guys, why options are important and what you need to know to start out. So I'm excited because I'm going to show you exactly what you need to know to start using options in your trading. So if learning how to do that sounds good to you, now is a great time to turn off all distractions. I know you're not going to shut your cell phone off, put it on vibrate or whatever, close your door, maybe close some of the other windows on your computer, because I think what we're going to talk about is going to be important for you. And I want you to stay focused and give your full attention, because some of the stuff could make a big positive impact on your life. I promise I'm going to give you everything I can during this hour to introduce you to options. And at the end, I'm going to show you where to go to get more help because we here at VectorVest want you to be able to get results fast. Okay. So that's what we're looking to do. If you take nothing else away, or there's one thing that I really want you to understand as we begin, is this, and that is until you know how to use options correctly, your portfolio will never achieve its full potential. Okay, think about that for a second. I'm not saying you can't be successful. Okay, if you're just trading stocks, and I'm sure a lot of folks are. I'm not saying you can't profit and be successful. What I'm saying is that you'll never reach the full potential. That's the power of options, and that's why today's webinar is so important. Before I jump in further, I see some familiar names. There's a lot of new names in the chat box. My name's Jim Penna. I'm the manager of retirement services here at VectorVest. Been here, I don't know now, just about 15 years, going on 15 years that I've been with the company. And prior to that, as I said earlier, I'm from the Northeast. I live in Connecticut. I worked in New York on a trading desk as a market maker for a long time. Some smaller brokerage firms on the trading desk before that. I took my Series 7 back in 1992 is when I started in the business, and I think it's important that you have some background as to who's talking to you. And one final note I always like to share, maybe three lifetimes ago now in Connecticut, I was a police officer for just under 10 years, and so I tell folks when I do these webcasts that if at any point it sounds like I'm telling you what to do, that that's where it comes from. So that's my first joke of the day. All right. Thank you, Ben. Ben got it. I am just one member of the education team here at VectorVest, and this is our entire education team led by Miss Linda Royer, Mr. Don Payton. Those are our generals, and we serve them. Steve is here with us today. He's here. John is with us here as well, and this is the rest of our team. So it's great to be a part of that team. All right, let's get into it. There are several reasons, I believe, that why those who are new to options fail. And first of all, it's because they just don't know where to start. They feel lost sometimes, which either causes them to drop it altogether because they're not sure how to do it, or they make enough mistakes where they diminish their ability to go out and buy options at all. Okay, that's one reason why. Another reason is they get too confused at the beginning or intimidated by all the terminology and all the horror stories of options trading. Okay, so that happens. Now, what they do is also, the folks I get to talk to tell me that they want to use options because they do understand the fact that it's a great way to leverage their money. Right? The flexibility and versatility of options are endless, but the basic thing we're going to talk about today is that when using options, you'll be able to get the same or better returns by using less capital. And that really, to me, is the definition of leverage. So when you're trying to grow your account, whether it's for retirement or just well, it's always for retirement, I guess. We want to grow our accounts. This becomes extremely important. So I want to show you how to do that. My goal today is to walk you through these important factors. Number one, I want to filter out a lot of the noise so that I can talk about what you need to focus on as it pertains to the terminology and the terms. Okay, we're going to talk more about that. You have to know when is the best time to place an option trade, whether it's a bullish or bearish trade. You have to know how to correctly set up your option trade. And then most important, I believe, is the having a system. And we're going to talk about a 5-step option trading system here today. All right. Now, I'm going to ask you again to interact with me here, and I want to know so far, and a lot of folks are new, and you may just type in everything, but so far, what's the hardest part about trading options for you? So I can get a sense of where you guys are at. So go ahead and type in the chat box. Let me know, just a couple of words. It doesn't have to be too much in there, a whole paragraph or anything. Okay, boy, it's all coming in. So yeah, a lot of folks. Kenneth says the math. That's a good one. Kevin says I'm completely new to options. Uh, Putting it all together, they're coming in fast, so it's hard for me to read them all. When to enter and exit. Finding the right stock, which is we're going to talk about that today. The terminology, right? Yeah, timing. Okay, perfect. Yeah. So if I had to summarize what I'm reading here, um, it looks like there's the one important thing that I think you need to know. So this works out. Okay. So you can write this down. Hopefully you have a pad and paper out. But again, if you get nothing else that you take away from this webinar, understand that it's your system that will determine your success. That goes for option trading. It goes for stock trading. It goes for life in general, right? In my opinion. It's your system that will determine your success. If you don't have a process, then you may get lucky and have some winning trades, but you will not succeed over time. So the main thing I wanted you to take away from today's webinar is that you need a system that tells you when to trade, well, again, whether it's bullish or bearish, what underlying stock and what option to trade. And then what a lot of folks where they'll fail is that they're not sure how to manage the trade once you're in the trade. Okay. So that's it. And so what we're going to do, we're going to dive in here. We're going to look at how to focus on the most important issues as a beginner, as someone who's new to options. Now there are other terms you'll learn as you gain more experience with options, right? Well, you're not going to have a PhD in option trading at the end of the hour here, but let's focus on the main terms first and get right to the useful information. Okay, so we've got our blinders on, looking at what's important, because if we don't, okay, again, when people who are new to options, they start trading, they get intimidated by all of the terms, calls, spreads, condors, gamma, vega, the Greeks, all that stuff, and it can become overwhelming. And you begin to feel like there's too much information and that only, an expert can do it, which is just simply not the case. So, we'll just start here. Here's a look at an option screen at just one of the mainstream brokers. This is typically what you'll be seeing, and if you're new to this, right, just this alone can be intimidating. So what you want to do is simplify it. So let me show you something that may change things for you when it comes to options and how we approach this. Okay, so the thing to remember is that there are only two types of options, right? There are call options and there are put options. And I'm gonna talk about and define those for you in a second. But there are only two types of options, calls and puts. And there's only two things you can do with those calls and puts, and that's buy or sell them. There are buyers and there are sellers, right? Just like a stock. And that's what an option is. It is a security, and it trades just like a stock. Okay. It has a bid price and an ask price. It has market makers that are tasked with providing fair and orderly markets. Okay. So it trades just like a stock. You can buy and sell them, and there are calls and puts. Okay. So once you start there, the most complex option trade out there is made up of these four actions. I want to first go over a couple of basic definitions as we move on, and this is always a good chart. We like this kind of this layout to help us with it. So as I said, there are calls and puts, and there are buyers and sellers. Let's start with a call option. Okay, and remember, it's a contract. An option is a contract. It has strictly defined terms and conditions. So when the buyer of a call option enters into that contract, right, he has the right to buy 100 shares of a stock at a certain price by a certain date. Those are the strictly defined terms of the contract. At a certain price, which we'll define as the strike price. At what price do you strike the deal? By a certain date, which is the expiration date. Okay, so you're paying money. A buyer pays money. Money comes out. It's a debit from your account. But for that payment, you are conveyed certain rights. Okay, that's the buyer of a call. Now, the seller of a call option or any option has obligations, right? Because as a seller, you get paid. Somebody's giving you money, but they don't pay you for nothing. And so you take on obligations. The seller of a call option has the obligation to sell or provide 100 shares of an underlying stock at a certain price by a certain date. Okay, you get paid, but you now have the obligation of providing that stock. Let's switch to the put side, and a lot of this will become clear as we go through some examples. The buyer of a put option, right? Now I'm paying money out, and I'm going to have rights conveyed to me that I have the right to sell 100 shares of a stock at a certain price by a certain date, right? One great way to remember this is, call up and put down, right? Call, if you're long a call, you're bullish and you're looking for the stock to move up, and as the buyer of a put, you're looking for the underlying stock to go down, right? More specifically, a call, right? If you're the buyer of a call option, it gives you the right to call away stock from someone. That's where the name comes from. It gives you the right to call away someone else's stock. And the put option allows you to put the stock to someone else or sell it to someone else. Okay. And then finally, just like a call, a seller of a put has an obligation to buy 100 shares of a stock at a certain price by a certain date. So these are the contracts that we enter into, and an important thing to understand is that these trades, just like stocks, are bullish and bearish. So if you're the buyer of a call option, you're expecting that underlying stock to rise in price, right? So you have the right to buy it. The seller of a put option has the obligation to buy, and if you don't want that stock put to you, then you have a bullish outlook here that you're going to get to keep the premium you sold. And I'll get more into that in a bit. We're going to talk mostly about buying. We're not going to talk too much today about selling options. All right, this is just the intro here. So the seller of a call and the buyer of a put, these are bearish outlooks, right? The trader there is bearish. The selling of a call or the buying of a put option. Okay, so that's our introduction to options as just that 30,000 foot view, and we're going to illustrate all of those concepts much more clearly as we go through. So a great way to help you understand options is by comparing it to something that I'm sure if you're here that you already understand, and namely that's buying a stock. Okay, not the option, just purchasing the stock. Now here's a graph of Apple. Now before I go through this, disregard the dates on these illustrations. It's the concept I'm trying to convey. So don't worry about the dates or the prices here. It could be ABC stock at any time. Just keep that in mind as I go through. So here's a graph of Apple. Apple at this point was currently trading, we're rounding it right at $130 per share. Okay. So what would it cost you to buy 100 shares of Apple at $130 per share? You guys can type it in. I want you to interact with me. And I know you know the answers, but type it in anyway, right? Bo and Nick and yeah, 1,300. I'm sorry, not 1,300. I wish $13,000 to buy 100 shares of Apple, right? So that's correct. That's what it would cost, right? Pretty straightforward math. Now, I'm going to give you a couple of scenarios. What happens if Apple drops to 125? What are your shares worth now at $125 per share? How much are your shares worth now? Right. You would lose $500 here. You're now worth $12,500. Right. Everybody's typing in. I know. Here's the other question though. Do you have to sell your shares? Are you obligated in any way to sell that 100 shares of stock that you own? Right. And everybody's typing in. Right. Exactly. No. You're under no obligation to do that. Okay. Pretty straightforward, right? That's when you own a stock. We'll flip the scenario. What if Apple goes up to 140? What are your shares worth now? Right? Well, we can do the math. And the same question comes in, do you have to sell your shares? Okay. And the answer for both of these, again, are no, right? You don't have to sell them and you're worth 14,000 now. Again, I'm laying the foundation because we're going to talk about options in a moment. Here's another great way we like to illustrate this. So we talk about an example of buying stocks long or owning the stock, right? So we determine that the initial cost of Apple or ABC, whatever stock it is, at $130 a share would be 13 grand. Okay, then this is what we call kind of the what if chart here. So if Apple doesn't move and we sold the stock at 13, our profit or loss would be zero. If, as we showed on the graph, if it goes down, we lose 500. If it goes down to 120, we would lose 1,000. And then, of course, if the stock rose, we would profit. Right? Again, very straightforward. What's the max profit on this position? If I'm long 100 shares of Apple, what's the max profit? Right. Yeah, most couple of folks are typing in 1,000, but no, we own the stock here. The max profit here, of course, is unlimited to infinity and beyond, theoretically, right? And our max risk, we already know, is the initial costs. Theoretically, Apple could go to zero. Okay, so that's how we look at a stock position, right? And we're all aware of that. Now let's change gears a little bit. Here's Apple again, same graph. Once again, we're bullish on Apple, but instead of buying 100 shares, you want to buy the right to buy Apple at $130 per share. Okay, so you're not actually buying the stock, you're buying the right to buy the stock at $130 a share. So let's walk through the scenarios again. Right? You buy that one call option, it gives you the right to buy Apple at 130. Okay? And remember, one contract equals 100 shares. It gives you the right to buy 100 shares of Apple at a certain price. That's the strike price, which is 130, by a certain date, which is the expiration date, which I'll fill in here in a moment. Okay. Now, this call option in this example happens to be at that moment in time was $3.65 per share, or $365 for one contract. It gave you the ability to control 100 shares for $365 per share. I'm sorry, $365 for one contract. Okay. So now let's look at scenarios here. What if Apple drops to 125? Okay, two questions. Will you want to exercise your right to buy Apple at $130 if it's trading at 125? Right, and everyone's typing in no. Thank you. Yeah, of course not. Right? Why would I exercise my right and buy it at 130 when I can go out in the open market and buy it at 125? Okay, so that's correct. So scenario 2 says, all right, Apple rises to 140. Now, would you want to exercise your right to buy Apple at 130 if it's trading at 140? Okay, and usually it takes longer to get to the right. Everyone who's typing in yes, theoretically you are correct, right? I could buy the stock at 130, it's trading at 140. Okay, but a lot of people are typing in maybe or it depends, and that's really the correct answer. When we talk about trading options or buying options, call options or put options for profit, we very rarely, if ever, are looking into the idea that we're going to exercise our right to buy or sell the stock. Okay, that's not what we're talking about here. So remember, when a call option rises in value when the value of the underlying asset rises. And the value of a put option rises when the value of the underlying asset falls. Right? And so if the underlying asset falls on a put option, we just sell the put for a profit, just like we would a stock. And conversely, if it goes up, we would sell the call just as we would. Okay, but it's important to understand what can happen. But at any point, you can just sell the option for a profit. Remember I said earlier, it's a security and it trades just like a stock. All right, let's take a look on our what if chart of buying a call. We determined, right, that at this point, the value of the option was $3.65 or $3.65 for one contract. Now, at expiration, okay, at expiration of this option, if Apple was at 130, we would lose our initial investment. Right? There'd be no value to the option. We would lose $365. If the stock went to 125 or 120, just mathematically, if at 130 we're losing our money, we're going to lose it at 129.99 and below as well. Okay. Now, what if Apple goes to 135? Well, at expiration, the option value would be 5 points, right? We have the right to buy it at 130. It's trading at 135. That's $5 of what's called intrinsic value. And at expiration, that would be $500. So if we sold this option right at $3.59 on the third Friday of the month, we're going to make $135. Right? The value of the option is $5. Remember, we paid $3.65, so we make $135. Same thing here. If it goes up 10, that's the value less the premium paid, and there's our profit. Okay. We know what the max risk is already, so you don't have to type that one in. But what's the max profit here? What is our maximum profit on buying this call option? Right. Bo says unlimited. Yeah, same thing. Theoretically, right? The only thing that limits it is the expiration date. But theoretically, the stock can go to infinity and beyond, and it's unlimited. And we've already determined our initial cost is our max risk. Okay. So that's buying a call example. So let's take a look. On February 6th, now we'll use the actual price, which I've been rounding to 130, but it's 129.73. What happened? On March 1st, Apple had risen to 139.79 a share. That's a 7.7% increase had you bought the stock. Right? That's wonderful, right? The stock moved up. That's fantastic. But here's the thing. Let's now use our what if chart to compare. If you had bought 100 shares at 129.73, there's your initial cost. On March 1st, not even a month later as our target date here, just for numbers, the value of your position would be $13,979 or $1,000 profit, as we just showed on the graph. 7.7, that's wonderful. Okay. Now, let's compare it. One contract at 365. The value of that contract on that date would have been $10.80 per share or $1,080. Less the premium we paid would give us a net profit of $715. Now, I understand it's not quite 1,000, but pretty close. I think you'll grant that that's pretty close. But here's the key. I talked about leverage. Look at your percent gain. Okay, on the $365 that you laid out, you have 195% return. That's on one contract. What if you did 3 contracts? Right? Your initial cost would be 365 times 3 is 1,095. There's your value. Your net profit here would be $2,100. Still a 195% gain. And then once you're comfortable and you move up, and just again theoretically, you go 10 contracts, and you've got a $7,000 profit on the same movement of Apple over that time frame. Okay. So that is the picture of leverage, the definition and the advantage of leverage. So I'm going to take a quick sip of water. I want you guys to type in the box if you had this working for you, and this is for all the new folks in here. What do you think might be the impact if you did this correctly? Right? If you went out, and we're going to talk about how to do all that, but that's That's the power of options there. Right, let me just grab a quick sip of water. Right, and everyone's typing in, right, more income, more profits. It could be life changing, right? Bob says. Right, it's a game changer. Financial security, yeah. Decrease risk with better profit, another John said. All right, yeah, this is the effect. Again, when you do it right, right? You have to do it right. There's a lot of people who don't. And I used to be one of them, and every now and then I still am. But if you had this working for you, that would be a very positive impact. So one of my jobs here today to help coach you is to help you make better decisions. So your first shift is to move from just trading stocks to where you mix in some options trading so that you can benefit from that leverage, right? You still, have you're still trading stocks, but you add in that leverage and that extra tool in the box by understanding options. So you don't have to type it in. Usually I'd ask you to type it in, but I want to keep moving. Right? Write it down. Hopefully you have a notepad with you. Would you rather just trade stocks, or would you rather um, have the ability to combine owning stocks and the leverage of options as well? So that's a question. You can just write it down. You can, yeah, both, David. Right. I know the answer. I want to, and great. Type. Everybody's typing in. Yeah, you want both. Okay, great. Let's keep moving. Fantastic. Let's keep moving. How to align your trades, right? So now that you know you want to use options and you've got to know how to trade them correctly. Most people get enamored with options trading and just go out there and just buy options at any time thinking that, hey, it doesn't cost me much. My risk is lower. I'll just go out and throw money at it. Instead, you want to align your trades to give yourself the highest chance for success. Now, this is where we talk about building the trades and having a process. Okay, let's use our friend Apple here again. You know that buying a call is best when you think the stock is going up. We showed earlier it's a bullish trade, right? Our bias on the underlying stock and on the underlying market has to be bullish. So this stock, at this point, Apple looked great, right? Stock was rising, broke through some resistance here. On this particular day, it was down a bit, but overall, the stock looks great, right? But what happened? What happened here? Well, the stock moved lower, right? The stock moved much lower. Now, here's a picture of the overall market at the time that trade would have been placed that I just showed. It was giving signs that a downtrend was in place. Okay, I'll talk more about that in a minute, but through the VectorVest program, there were signs of a downtrend. And for those who may remember, I know in this day and age it's an eternity ago, but October of 2018 was a very rough time for the rest of the year that we saw, and the VectorVest program alerted us to that in early October. Right? So when the market moves down like this, it naturally will pull most stocks down with it, even the good quality companies. So when you don't pay attention to the market's direction, trades, especially option trades, more times than not will not work out. So instead, you want to give yourself an opportunity for explosive gains. That's our goal here. So to do that, we need to align our trades. I like to think of it like we call it the match game, right? You want to make sure, again, I'm talking from a call option side. It would just be the opposite uh, idea for put option, but we have to match these. We have to align these. So the market is going up. The underlying stock is going up. That would, if you add the bullish option trade or the call option in this case, that would equal a match. Right? That's how we put probability in our favor. That's how we do it correctly. And by correctly, I mean putting probability in our favor. Putting the odds in our favor. That's how you do it correctly. It doesn't mean every trade's going to be a winner, but it means you'll win more than you lose, and it means you're doing it correctly, and that's how you profit in the options market. So the best time to buy a call option is when the market is exploding off a bottom. Of course, you can buy in what we call trending phases as well, but we look back at that October sell-off of 2018, and then the market had bottomed out right around Christmas Eve, and then we got signals in the program that the market had bottomed out and was giving us signs of exploding from that bottom. This is the best time. Same thing happened a year ago from right now, after the pandemic sell-off, March 23rd was a bottom. How do we know? Because the market started going up. That's how we knew it was a bottom, because the market started going back up, and VectorVest alerted us to that. This would have been a great time to be buying call options. Now, let's split the screen here. We look at the market trend, right, of those same time frames when that explosion, as we call it, exploding from the bottom, and the same thing here. So you have an Apple graph here at the same time frames, and so you can visualize the best times to buy a call option. And again, I'm focusing on calls because I have only so much time, but the same idea would work on the put side or the bearish side, right? So this is the best time to do it. At any time during that upward trending phase, you can do it as well. Okay, but you get the idea here. So again, the tool that I use, and I'm sure a bunch of you folks in the room use, is VectorVest, and we have our market timing signals. Specifically, one of those signals in VectorVest program is the buy-sell ratio. So just to give you an idea, this is just one of many indicators that we use. When the buy-sell ratio gets down to 0.20, meaning there's a whole lot of sell-rated stocks in our program versus buy-rated. That's basically what that means. It tells you that the market is at that point oversold, and that's where we begin to keep our eye out for that explosive phase. Okay. So again, here's an example. We'll look at Apple again, and as we saw, instead of buying the call back when the market is beginning to tell us not to do that, right? We would have waited till sometime after that sell-off in January of 2019 and bought the call option when the signals tell you that that market is beginning to move up. And again, it would have been the same idea here in March of 2020. Okay. Here's a look at what happens when you don't play the match game, when you have the wrong time and it doesn't match. Right? And you purchased this in October. The market was moving up, but showing signs of weakness. We saw the move in Apple. Here's what happens. If you had bought this contract and held it out through December for about 60 days or so, we saw what happened to Apple, and you would have lost your entire investment if you just held it and let it go, which most new people in options would do, by the way. Doing it wrong means just holding it all the way through and hoping. Okay, that's what happens when you don't align the trades properly. However, if you match it at the right time, in this case after that sell-off in late 2018, the market signals were telling us it's time to be bullish again, and here's the trade we could have put here. Okay, that's a 304% gain for a roughly 60-day option. Now that's if we held it to expiration. This is an important point I want to make. Okay, I don't teach my students in the JumpStarter course, in our Options JumpStarter course, to hold trades until expiration. That's not how we manage the trades. So while we probably wouldn't have held this to there, a 304% gain is amazing. But let me just ask, would you? I want you to type the answer into this one. I want to see your answers on this one. How about 165% gain? If our trade management rules that I teach my students in our JumpStarter course would have had them exit the trade here with that gain of over $1,600, would that be okay with you? And I want you to answer on this one, because anybody who says no, give me a call. We got to talk. Yeah, of course. A lot of folks are typing in. Hell yeah, John says. Yeah, it's great. Of course it is, right? That's what I was talking about earlier, a process, a risk management technique. So that's a great trade right there, and it's as simple as aligning the trade. So these explosive phases happen a few times a year, and we want you to be ready for them. Again, you could have profited in any of this trending area as well, but the very best times are what we're seeing perhaps right now after this most recent move in the market, where we are in a confirmed down now, and we'll be looking for these times to be ready to get back in, and the buying call options are going to be the best way to do that. So again, as I said earlier, one of my jobs here is to help you make better decisions. So when you place option trades, do you just want to place them anytime without regard to the underlying trend of the overall market, or do you want to start aligning your trades? Right? Right, and everyone's typing in again. Of course, right? We'd rather align our trades because that's, again, strategic shift number two. Here's what we do when we align our trades. This is what we can expect to happen. Again, raising the probability of being right. Okay. Okay, let's move on to principle number three here: how to set up your option trades. Right now that we know that we can use options for leverage, we know when we align our trades, we can be more successful. We now have to know how to set that trade up correctly. A lot of people learn in the basics of what a call is and what a put is, but don't pick the right strike price or the right expiration. Right? You can understand what a call or a put is, but if you don't know how to set the trade up, you're not going to succeed. So we want to be like our chess player friends here. Think ahead a couple of moves. Right? That's how good chess players are. They look ahead a few moves. Put yourself in the best possible position. Now, here's a graph. Again, disregard the dates or even the stock, whatever. But this is Home Depot, and this is a nice looking chart at that time frame, right? Stock's got that nice steady movement to the upside, right? So what would you do here? Well, if you wanted to take advantage of that, what folks will do is buy a call option. But the folks who do it wrong will, with the stock trading, somewhere around, we'll call it 147 or whatever it was trading at right here. What a lot of folks will do is they'll do it wrong, and they'll buy the 155 call, right, with the stock trading at 145, right, meaning that's the price where they have the right to buy the stock. That's called an out of the money trade. And new folks in options will do this because it's so much cheaper. It looks so much cheaper anyway, but it's cheap. You get what you pay for is the bottom line here. 47 cents per contract. That's a really cheap option. I can control 100 shares of Home Depot. But what are the chances of Home Depot getting to 155, especially considering there's an expiration date here? So in this case, this March trade for an April expiration would have expired worthless. The stock tried to move up, but mostly moved sideways. And again, it's a good company, but it didn't do what we needed to do because it didn't have enough time to move up. So that option over time loses value. So a lot of option traders, sometimes for new and old, right? Listen, a lot of experienced traders still make this mistake, suffer from what we call the boxer syndrome, right? A boxer who takes jab after jab after jab eventually gets knocked out because those jabs add up over time. Option traders are the same way. You think it's okay to take this small loss after small loss, and it eventually blows up your entire portfolio. Okay, and that's not what we want to happen to you. We want to put probability on your side. Okay, so here are two core problems that folks who are new to it run into. Number one is a thing called time decay, or the Greek for it is called theta. So here I want to show you what happens to the price of an option in relation to the number of days to expiration. So this theoretical look has an option value of 70 cents 180 days before expiration. Okay. Now, what happens to that? When I put a line here, it takes 135 days to lose 50% of the value of that stock. I'm sorry, of that option. To lose the first 50% of the value. That's assuming nothing else moves. The price stays the same, all other numbers staying the same. This is what time decay does to the value of an option contract. Now, with only 45 days to lose the rest, or the second 50%, the second half. Right? So time value is not good as you get closer to expiration on the underlying on the option in the underlying stock. Right. So here's Home Depot again. Let's just say we chose an expiration here. So that's a very short-term expiration. Okay. Or you can choose the later expiration. And what you see here is in that final 30 days or 30 to 45 days, you can actually see where the value of your, even though the stock's moving sideways, the value of your option is decaying there. So you have to give yourself enough time to be right. So the second problem is not only the expiration date, but that you set the strike price too far away. Okay, which means the odds of getting there are a lot less. Right? Most folks will do it because they're cheaper. They're cheaper for a reason. It's because your probability decreases. Okay, call premium decreases. That's why they're cheaper, but so too does the probability of success. And I'll say this real quick: the worst thing I think that can happen to a new option trader is this, that you go out and you place this trade here where you're deep, what's called out of the money, because it's cheaper, and you use a short-term expiration, which also makes it much cheaper to do the trade. In my opinion, the worst thing that can happen to a new option trader is that that trade works, that it's successful, and that you make money. Okay, and the reason is because now you think you can do it all the time. Right? We used to have a colleague who used to put up on the whiteboard this idea, this scenario of, on the left, the quadrant says right decision, wrong decision, positive outcome, negative outcome. Right? The worst combination is a wrong decision and a positive outcome as it pertains to your system and your process over time of being a successful option trader. Okay. All right. So keep that in mind when you see the very cheap prices that you think are going to make you a millionaire overnight. It's not a lottery. Okay. So with that strike price way up there at 155 and the shorter term expiration, again, what happens? The stock moves sideways, and if you hold it to expiration, you lose your initial investment. We don't want that. So what can we do? Well, here in scenario 2, we went all the way out to May. It's a longer term, gives us more time to be right. And instead of going all the way up to the 155, we bought what's called an at the money option. Okay, which has more value to it. And what happens if we held it all the way out to expiration? And again, we would probably be out of the trade somewhere in this range here. But if you held it to expiration, because you gave yourself much more time to be right, you had a successful trade. Okay, just because you pay a little more for the option doesn't mean that you're overpaying or that it's too expensive. And there's a lot that goes into option pricing, but just understand that because you're paying $1.47 or $2.47 instead of 47 cents doesn't mean you're overpaying necessarily. So keep that in mind. It's an important part of being successful. So strategic shift number 3 here, okay, is what would you rather do? Have no rules, just fly by the seat of your pants saying, hey, Kramer said this stock might go up today, or somewhere else you read in some, website or whatever it might be? Or would you rather have rules in place to set your trades up the right time with the right strike and the right expiration? Okay. I know the answer. You want to have high probability rules. Right. Bob says, I want a plan I can follow. Okay. So today has been all about building your option trading system to possibly, we say double your annual returns for that portion that you allocate to options. And we saw, that sounds right, pretty aggressive, but we saw the power of leverage for the money you allocate to options. So right now I want to share with you how the best option traders build their system, and this is key here. Remember I said the system will determine your success at the beginning. And here's how we do it. There are 5 pieces of your system and they build on each other. At the top of the system is market direction, and I just showed that on the graphs. A lot of traders ignore this and think you can't time the market, and people who say you can't time the market can't because they don't know how. Right? We recognize trends. That's what the VectorVest timing said. We don't predict. We recognize trends and put the probability in our favor. So I showed that, how important that is on those graphs. Okay. Next is the stock finder. Right? After you know the direction, you want a way to find stocks that are likely to move in the same direction as the market. In other words, a good quality stock that's rising in price. Right? Sometimes a lot of folks will just trade the stocks they know or listen to, again, the gurus on TV or the websites or the apps or whatever. It's not always the best choice for doing this. What you want to do is find good quality stocks that are already in uptrends when the market is rising. And conversely, again, I'm talking about call options, but conversely, we want to find crummy stocks, right? Or stocks that we believe are going to fall in a downtrending market if we wanted to profit using put options. Okay. Now, once you have that list of candidates, you want to select the best candidates for the option, because a good quality stock may not be the best option candidate for a call option. And the same thing for on the put side. Okay. So you want to be sure that you have the proper setup in time. And then finally, as I said, trade management is probably the most important part of the system. This is where people fail, right? We talked about trade setup with the expiration and the strike price, but when we talk about trade management, this is where most people fail, and it's where you're going to have a plan in place to manage the trade after you've entered it. This means before you place the trade, you want to know what you'll do if the trade goes against you. Again, that goes for stock trading, long-term, short-term stock trading, or options trading. It goes for any type of trade you hit the enter button on. You got to know what you're going to do before you hit the enter button. Okay. So you have to have that risk management technique in place. So with those 5 pieces of information, what I want to do is I'm going to go through a case study, a trade, and kind of theoretically check off the boxes here, if you will, as we go through. So again, the date, this is October 10th of 2019. It's just the date that we show here. There was a green light in the price column in VectorVest, and it happened after the market was near oversold conditions based on the buy-sell ratio. So there's a specific reason we're choosing this date. Okay. It's because the VectorVest system recognized an uptrending market. Okay. So the green light signal after the market was near oversold levels checks that first box on that list of market direction. Okay. Next, on October 10th of that year, Apple was trading at 230.09 and hitting new highs. So the graph pattern was doing what we wanted to do. The stock was moving up in a rising market. Okay. And again, it could be ABC stock, could be any stock, that Microsoft, Facebook, well, it doesn't matter what stock. As long as the stock's moving up. There's our stock selection. Okay, good quality stocks, and the VectorVest program provides a lot of ways to help find these quality stocks. Okay, we've determined we're bullish on the underlying market and we're bullish on the underlying stock. So our call, our trade or our call option, of course, would be the call option. So that's our option selection. Okay. You buy that Apple January 230 call because that's right where the stock's trade. It's an at the money option. Right? There are some other nuances that go with it, but roughly at the money is where we want to be, at least. And in this case, you would have paid on that date $12.45 per share for one contract, which would come to $1,245 to control 100 shares of Apple, which is trading at $230. Okay, so there's our scenario. There's our trade setup. Now this is October, so we'd go all the way out to the January, October, November, December, January, roughly 90 days, right? 3 months out we're going to go. We're buying an at-the-money call 90 days out to expiration. That's what we define as the trade setup. Now here in this example, a couple of months later, aligning our trades and using a process on just December 2nd, you were up 185% or $2,300 on your one contract. Right? That's pretty good. A lot of our risk management techniques would have you taking that. But some of them would have you simply tightening the stop or maybe selling half of your calls if you had more than one. If you had, let's just use an even number. Let's just say you had 10 contracts. You could sell 5 of them once that initial profit target's met. and hold on to the other 5. Or you can close the trade, which is what I like to do. I like to pocket that profit and move on. But you will have trade management techniques in place. Now, in this case, had you either just tightened stops or whatever technique you would have used, the stock continued to rise and you would have had about a $7,000 profit or 574% return. Right? Again, being realistic, there's a really good chance I would have been out of this trade before then, but just to show you the potential that's here when you use this leverage. Okay, and that again is part of our trade management. So the first thing you want to do is take a look at your system and focus on where you might be lacking. Right? I know a lot of you are new, so I mean you may be familiar with market direction and finding good quality stocks. My guess is that most of you here can do that. Okay, so again, hopefully if you have a pad or a pen and paper out, you can jot these down and take a moment and put either an X or a check mark next to the ones you feel comfortable with. Right? If you're comfortable using VectorVest or however you do it to find good quality stocks, put a check mark next to it. If there's an area where something you feel you need work on, put an X next to that one. Okay, this is more for your own idea. You can type in some of the things that, what do you think you need work on? Right? What do you think you might need work on? Right? You could type it in. You don't have to. This is more for your help. John says selection. Right? Yeah. Well, the selection can be a broad term, right? I have to select my market direction, find the right stock. If we're bullish, we're going to use put. This option selection portion is if we're bullish, we're going to buy calls. If we're bearish, we're going to buy put options. Okay. Yeah, Robert says trade management. Yeah, that's very, as I said, that's where most folks who are, and again, even veteran option traders, that's, greed comes in, emotions come in, and it's hard to escape that. Okay. So yeah, a lot of folks are time. Yeah, John, you can set stop criteria on options just the same way you do a stock. You certainly can. Okay, that's a good look at where you are in your options trading plan. So I'm going to ask you guys, what did you just learn about your option trading system, and what area do you need to focus on? Now again, for those who are new, and it's the majority of the room, I believe, what you might have learned is that you don't have a system. That you may be okay recognizing market trend and buying stocks, but it seems that you may not have a system for most folks who are new. Right? Right. Kirk says I have no plan. Daniel says I'm trading with too little time, and Daniel, that's a great point, because having that system in place will certainly save you time. Right? Once you begin to do it, like anything, the repetition of employing your plan will certainly save you time. And then Alexander said, in a perfect segue, that's why I'm here. Okay, that's why I'm here. And that's why you guys are here today. You need to get to where you have the check marks all the way down that trading system. So I'm guessing you showed up today because you know that options can help increase your returns, but you weren't sure where to start. Okay, maybe you were confused or intimidated by all the terms, like I said at the beginning of our presentation. Okay, maybe you've tried options before and you've taken those jabs, those small losses after losses until it broke your account. I've been there more than I care to admit to. Okay. But you're also here because you know options can help you leverage your money and grow your portfolio at a faster pace. Okay. That's why you're here. Why ever you showed up, I hope that you see that your system determines your success. That's where we started. Okay. And this is where it leads us. Your system will determine your success. We talked about the 3 shifts here. We talked about, instead of just buying stocks, you start adding in some options trading to leverage your money. That's how your portfolio will meet its full potential. Strategic Shift 2 talked about explosive gains by aligning your trades and matching it to the market trend. And then strategic shift number 3 was not to just do this randomly and have a way to put probability in your favor so that you can eliminate those constant small losses, which will break ultimately your portfolio. So let me just ask you this. Do you see how powerful options can be when done right, when done correctly? Ben says yes. Glenn says yeah. Edwin says yeah. Right. And everyone's typing when you do it correctly. It's life changing. So right at the start, I promised I was going to give you everything I could during this hour. And at the end, I would show you where to get more help because we really do want you to get results fast and positive results fast. So the obvious question is, how can I implement the system now to get the results that I'm looking for as quickly as possible? So it's time to make a choice. You can do it alone, but that might take you a while. Plus, when you keep doing what you're already doing, if it's not working out, you'll continue to see the same results. And when you try to do it on your own, you'll be learning by trial and error, which again could lead to more losses or have you give it up altogether, which is, we don't want you to do for sure. Or you can do it fast, use a system that's been proven to work so that you can bypass years of trial and error that so many go through and our clients had to go through before they came to us. Right? So with that in mind, that's why we put together the Options JumpStarter course, 6 weeks to profitable options trading. Okay, it's a complete step-by-step system that shows you how to buy calls and puts to profit in both up and down markets. Now, I focused on calls a lot, but the same idea goes to puts. And as we've seen, the market can take a hit. You can profit from that. We'll take you by the hand and guide you through the exact step-by-step option profit system you need so that you can use that leverage we talked about. You can leverage your money with options. The outcome in the next 6 weeks is that you'll be able to confidently find, set up, and manage the right option trade, just as we talked about, at the right time. And again, this is the key, to make money whether the market's going up or down. When there's a defined trend, I don't really care if it's up or down. Now, from a retirement-minded side, or if I own stocks, of course I want it, I'm bullish, but I can profit or protect my portfolio in a downtrending market very easily with the power of options. So if you're new to options or have struggled with them in the past, I believe this is the course for you. And we put this course together for people who want a system to trade options the right way. So before I go any further, I want to let you know we do offer a money-back guarantee on the course that I want to talk about on our Options JumpStarter course. Right? In the markets, they say there's no such thing as a risk-free trade. And that's true, except for here. This is a risk-free trade because after the course is over, if you show you've done the work and you're not satisfied, we will gladly give you a 100% refund. So for you, this is a risk-free trade. Okay, so keep that in mind as I walk through what the course is all about. I won't read each word through this, but we've had folks take the course. This is from Roger. He had recently retired, and he said, if you're like me and you've never traded options, I would stress that you should not make a move until you completed this course. Okay, and he goes on to talk about the outcome of his trades will be positive and making money, and that puts me in a great psychological state, as I know options do not have to be a gamble. So I love that part of that idea. Let me take just 3 minutes here to walk through and explain, map out for you the course. Okay, but stay with me because there's a lot more that goes along with these 6 modules. There's a lot of resources and a lot of resources for what the course is offered at, and I'll get to that in a minute. I get in trouble for saying this from my bosses, but we're giving it away at a pretty good price here. But here's all it is, right? In module number 1, we'll start with the options foundation builder. It is so important because a lot of people try to learn options on their own and they get frustrated. Okay, that's what we talked about early on. The outcome here in Module 1 is you get complete clarity on how options work. It's a clear and easy to understand framework. So you'll know all about calls and puts. You'll know which terms to pay attention to. And at this stage of your options trading, you'll learn which you can ignore so that you don't waste time or get frustrated. Module 2 is all the trade you'll need to generate profits in up markets, right? This is all about setting up call options, right? Preparing yourself for that blast off, successful setups, understanding your rights. The outcome of this module is that you'll learn exactly the signals to look for to identify those market trends, the blast offs and the trending phases I talked about. And you'll also have an exact rules for successful setup. Module 3 is the same as Module 2, only it's going to talk about profiting in a downtrending market. Right? A lot of folks get frustrated in downtrending markets because they don't know how to profit, and they sit there and watch the drawdown in their portfolios, or they just go to the sidelines. The outcome of this module is that you'll fully understand the trade to use to take advantage of down markets. Module 4 is about trade selection. It's important because you don't want to just place option trades on just any stock, right? We talked about that. You have to find the proper candidate, and it has to be aligned with the market, and the actual option trade has to be viable. So the outcome here is you'll know how to find the best stocks, both bullish and bearish, how to match your trades to the market, and how to identify which stocks actually make the best candidates for an option trade. I've said it about a half a dozen times. Trade management, in my opinion, is the most important part of the puzzle here. Right? You don't want to be a deer in the headlights and not know what to do, whether your position's going up or down. Okay? The outcome here is that you'll have a game plan in place prior to placing the trades so that you know when you'll exit, whether the trade goes in your favor or against you. Okay, and here's what separates our education and our courses from many, I believe, and that is in Module 6, we'll get ready to actually place your trades. A lot of people learn the theory of option trading, but then you have no idea how to enter a trade with the broker, right? If you don't know how to do this, if you don't know how to enter the trade, you can go out and place option trades and get burned because you messed up the order. You hit sell instead of buy. You bought at whatever it might be. But we actually take it to the next step and show you how to enter the trades as opposed to just the theoretical side. Okay, so it's very important. Now, those are the 6 basic modules. As I said, there are a lot of other resources going with that. So by registering for the course today, you'll receive a bonus module teaching you how to use covered calls for income. I saw somebody typed in earlier, caught my eye, and I'm a big covered call trader, and they said they lost money selling covered calls, and I don't like to hear that, quite frankly. Right? So we'll have a bonus module. Consistent income every week. Get paid to own your stocks, and we'll talk all about that. So it's a great bonus module. It takes your options to the next level. Doug also had commented on the course. He said, "I wish I'd taken this course 20 years ago." He went on to say that the bonus session on covered calls alone makes this course worth it. Okay, so there's a happy customer there. In addition, if you're here in the room and you do not have access to VectorVest, if you're not a current subscriber, we want to make sure that you have access to it during the course. So for the life of the course, we'll give you access for 60 days to the tool. It is the best program out there at determining market direction, finding the right stocks, and it will dramatically reduce the amount of time you spend setting up your trades. Also, for those of you who choose the mastery package, which I'm going to get to in 2 minutes here, this is my favorite part of the course. You'll get 6 live mastery support sessions. Right? Think of them as implementation sessions. We watch the module, we learn, and then we have a live session, and I'll go over the dates and times in a moment, where we help you implement what to learn. We look at what you're doing, we guide you based on the principles in the actual course. And if you can't make the live session, don't worry. We have a dedicated email bin, and we answer those questions during the live recording, which you'll have access to in the VectorVest University, again, which I'll show in a moment. So if you can't make the live session, it's fine, but you get 6 live mastery sessions implementing what we actually learn. So there's a lot of stuff that comes with the course. As I said, a lot of resources. Here's what it would cost, and I'll just scroll through these quickly here. Here's what it would cost, right, to do that. It's over $2,000 if you did it a la carte, as they say. Okay, a lot of resources here, especially in the university, that go with it. But we have two options, excuse the pun, for you. You can either choose the self-study package or the mastery package. If you order before the end of the webinar today, you'll get the mastery package for the same price as what we call the self-study package. This is by far the best value that we have. So what's the difference? Well, in the mastery package, you get what I had showed you, the full course. Those are the 6 modules. You get, by the way, this is another huge positive here. You get 1 year access to the course, to all of the resources. From the day the course ends, you have 1 full year access. So it's not just, hey, here's how you do it. Good luck. We'll see you next time. You have 1 full year access. Again, the covered call bonus for new subscribers. And then here's the difference between the self-study. You get the live Q&A sessions plus the bonus modules taught, along with the 6 live mastery sessions. So you're going to get that for the same price as what we call the self-study. If you go to www.vectorvest.com/jumpstart, which John was kind enough to just type into the chat box, so you can just actually click on that tab that John just typed in, and it will take you to the registration page, which I'm going to take us to in just a second, just to walk you through it. Right? VectorVest.com/jumpstart, and you'll be able to take advantage of the $295. Now remember, again, it is a risk-free trade for you. $295. It's 1 covered call, as Doug had said in his letter he wrote to us. It's 1 trade, and it's risk-free because you get it back. Okay. It comes a time you ask yourself, I'll ask you, but more importantly, you have to ask yourself, what will it cost if you do nothing? How much money will you lose by trading options incorrectly? How much potential profit will you miss out on because you don't know how to use options the right way? How much time and energy will you spend trying to do this on your own? These are questions I'm asking you. You got to ask yourself. Then ask yourself how your life might be different if you do this and it works. Okay. John and I are going to stay on here, and we're going to answer any and all questions that you have. So you have time to go to vectorvest.com/jumpstart and sign up for the course and take advantage of that time. So let me quickly walk you through. This is the page. I'm going to go to the actual page, but this is what it'll look like. Right? You'll click register today, and that will get you into the program. So again, remember, go there now. While we're on here, we'll make sure everybody gets in there, and we'll talk about that. Robert's asking, when is the course? If you sign up today, Robert, you go to JumpStart, in a little while, it takes anywhere from 10 minutes to an hour or so, whatever. Shortly after you sign up, you'll receive an email from VectorVest with all of the instructions and how to access the course. You'll have access to the course today. And again, give me 2 seconds. I'm going to go in and show you what you got in a second. But you'll have access today. And then here quickly is the schedule for the live mastery sessions. They begin on March 24th. And they're every Wednesday at 11 a.m. Eastern Time for the next 6 weeks. And then the bonus module, we don't have the May out here, but the bonus module will be that following week. Okay, so Kirk, great, wants to sign up. You have to go click on that link, Kirk, or type in www.vectorvest.com/jumpstart, and here's where it will bring you to. Okay, this is where it's going to take you to. It's going to, that same slide I showed you, this is what it's going to look like. Okay. You can scroll all the way down. It'll give you a whole bunch of information that I just shared with you, right? And you can see the price down here is $495. However, because you're here, when you click register today, okay, and you choose the mastery package, what's going to happen is you'll see it says enroll today for just $295. Right? The actual price of the course is $795. Okay, we have what's called an early bird at $495, but again, because you're here and you're still here, we want you to take advantage of the $295 price. Okay, and again, here's all the description. I've gone through all of this already, but purchase the course now. And this is where it will bring you. Just continue to follow the prompts. This is our buy now bonus. Proceed to checkout. Now, if you're new to VectorVest, you'll have to fill in some basic information. It's just the basic stuff that we need. If you're already a customer of VectorVest, just simply click sign in, and you can purchase it through the VectorVest University. Let's see, Ben, I'll flag that one there. If you're having an issue, you may need to call in, or maybe John has an idea there. I'm going to I'm going to ask John to come in because a lot of questions that have been coming in are we're going to take again a few moments. As long as there's people in the room, I'll stay here and answer questions, John and I. I'm going to take a quick drink of water here, and John, I'll ask you to come in and help me out with anything that I missed or something that I need to talk about. We'll start here. Kirk's saying he's not seeing the 295. So again, if I go to the web page, which this is the live page, vectorvest.com/jumpstart, I choose register today. Okay, you'll see the 295 price when you have to click on the mastery package registration. When I click there is when the 295 price will show up, and here's where I can continue through. Okay, so for me, I'm already signed in there, but that's how you do that. William, thank you so much. William says he is signed up. He says anything else for today? William, thank you so much for doing that. And just keep the only thing. Look, Chris is even going to help you out here if you're on the page there. William, all I would say is keep an eye out for the email. If you have any questions, you give product support a call, but all of the instructions you need will come there. Bo, you don't need to be an elite member. That's elite member is someone who's been here, I think, for 5 years or has spent a certain amount of money with us. If you're not an elite member, by the way, this is elite pricing, by the way. Right, the 295 is better actually than elite pricing. If you sign up now, if you take the opportunity now to use that 295, it's actually cheaper than that. Ben says he got in, great. And John, I'm sorry. What do you see, John? I got to take a sip of water here again.
All right, I have a few questions here that I laid out.
Mm-hmm.
First question is about the software that they get access to. Do they get VectorVest, and under what circumstances do they get it?
Yeah, if you're new to the program, you're not a current subscriber, you get access to the VectorVest end of day program. Right, I believe it's end of day, and that's all you need to do what we're going to do to teach the course. We give the program so that everybody's on the same page as we teach the course. But you will have access to the VectorVest program for 60 days, and then you can choose to use it afterwards or not. Keeping in mind that you have access to the course for 1 full year, whether you subscribe to VectorVest afterwards or not. Okay, you still have access to the course for a full year. Okay.
And Jim, it's actually the intraday.
I'm sorry, did I say end of day? I'm sorry, John, thank you. You actually get 60 days of the intraday program, which means that quotes are streaming, keeping in mind it's a 15-minute delay. So from 9:30 Eastern to 9:45, your screen will be static, but then it will begin to stream, which is, I always say sometimes intraday is better. It keeps me from reacting too quickly to quick moves in the market, but That's how that. So thanks, John. It would be intraday that you get.
Just to confirm again the date for those sessions,
Hmm.
live sessions.
Okay. Let's go to that slide. Whoops. Let me close this for a moment. And so here are the live sessions. They begin on Wednesday, March 24th at 11 a.m. and they'll be every Wednesday after that, 11 a.m. Eastern Time. And again, remember, if you cannot make the live session, it will be recorded and archived in the university, in the VectorVest University, where the course is located. So if you can't watch it that day, you can watch it later on that afternoon or night, and you have access to it for a full year. And then the bonus module is right after that, as we just don't have the May up there.
And Jim, just further to that, how long are those sessions scheduled to be?
Yeah, they're about an hour each Wednesday, right? Depending on the module, they may run a little bit longer, but they're roughly an hour to an hour and maybe 15 minutes each session. That's each live mastery session. Each, by the way, the modules, which are different from what we're looking at, these are the mastery sessions. Here's where we implement what we learned in the module. So the module is all six modules are available to you today if you sign up today. Okay, and these are the mastery sessions that address those. So that's how that works.
And Jim, just to circle back to Ben, who was having trouble signing in, I would have him call product
Yeah,
support.
I thought
So that,
I thought I saw that he had gotten in, or was that someone else? Yeah, anybody who might have trouble.
fine, yeah.
Yeah, it looks. I've gone into the live page and it looks like it's working. So you should have no problem. If you do, just give our product support. Uh, Ben. All right, good deal. Bruno says he registered as well. Welcome again for everybody who's registering. Um, just keep an eye out for that email. Make sure you check. Sometimes it'll end up in a spam or junk folder. Keep an eye out for it. And Ben, welcome. I'm glad that you registered. We're looking forward to having you in the course. Masood, if you're already a member, it will show you. It says if you're already a member, just sign in. Let me walk through it one more time, and then I'm going to bring up the actual VectorVest course. So you go register today. I'm sorry, I did that a little quickly there. Where it said register today, it takes you to this portion right here. Choose Mastery Package. Okay, hit Purchase Course Now. Right, we're just following the prompts here. This is the actual page. Now for me, it has sign in, so I can sign in to VectorVest here. So if you're already a member, there should be a spot there that you can click on, and it will simply bring me here. I don't have to put in that other information. I can just proceed to checkout. Okay. And if you're in the room right now and you are an elite subscriber, don't worry. This price is lower than the elite pricing. So if you want to, save yourself a phone call or whatever, and you're currently an elite member, just sign up for the 295 because it's actually cheaper than elite pricing. Okay, Masood, so hopefully that helps. Just follow those prompts. When it asks if you're a member, just type in your username and password, and that should get you there. Kathy says she's an elite member. Fantastic, Kathy. Again, you'll save even more by doing it now.
Excellent, Jim. I have a question here. How does this apply to non-US um, students who are not in the US, Canada, etc.?
Yeah, no, that's a great question. The concepts that you will learn apply globally, right? Whatever, if you're in Australia or Canada, UK, wherever you might be. Um, but if I have to be transparent and let you know that sometimes those markets are not as liquid as the U.S. options market. Okay, but you all have, that major index. You all have the stocks that trade and where you can profit by trading calls and puts on. Um, that's the one caveat or whatever you want to call it. Again, I'll always be honest with you, but all of the concepts apply the same way whatever market you're trading. There is the opportunity in all of the markets that we cover at VectorVest to profit using calls and puts. Okay, so the benefits are certainly there. We've been teaching this particular course or a variation of it for quite a while now. We have a lot of folks out of the UK, Australia, Canada, who have had great success using the course.
Quick question, Jim. Somebody wants to clarify. Um, Once they sign up, what happens? How do they get access to the material?
Okay. Well, as I said, when you sign up, keep an eye out for the um, the email that you're going to get. Okay, it's gonna point you towards how to get into the VectorVest program. I'll start this from scratch here. Let me open up a screen here, and this is how you would access it. Right, once you're in there, you type in university.vectorvest.com. You don't put in the wwws. Okay, you'll go to my dashboard. It may ask you to sign in. I'm already signed in. Okay, so once you're signed up for the course, here's how you access the resources. And there's a lot of them. So if I scroll down, obviously in my account I have access to pretty much everything here, but you won't have this many. So I come to the Options Paycheck Mastery package. Okay, and I'll hit continue because I'm already in it. Here's what it looks like. Right, Module 1 is here and it's located right here. This is the module. It is this particular one goes in with Q&A an hour and 19 minutes. Okay, this is where you learn all of the important options foundation as I talked about a few minutes ago. Right? There's other resources. There's a homework assignment. The mastery session from our last time we taught the course. Why am I in options? Am I in options paycheck? Sorry, folks. I'm sorry. Yeah, it's the same idea. I'm sorry. I was in options paycheck. I should have been in options JumpStarter. This is where I should be. Sorry about that. But it's still the same idea. Okay. I apologize. I hit options paycheck. You have your assignment walkthrough video for each. We give a homework assignment to each. The mastery session will be from the prior session. Okay, then we have another area here called resources. And here's where all of the slides for each module, if there's cheat sheets or anything else that you need, they're all found right in here. Okay, our bonus sessions are located here. And then really, I'll tell you what else is worth the price for $295. What's worth the price of the course? Our bonus number 3 here are VectorVest software help videos. Right, we have a bunch of help videos that will allow you to uh, see and learn how to actually place your trades. Of course, we'll talk about them in the modules, but they're all noted there. So that's what it looks like, and you have access to all of this for a year after the course. So Masood, yes, the first mastery session will be March 24th. But if you sign up today, you have access to all of this later today. Right? We urge you to watch at least, I know a lot of folks will move ahead, but on March 24th, we're going to talk about Module 1, right, in the mastery session. The idea being that you already watched Module 1, the actual lesson, before the mastery session. That's the best way to do that. Bo, thank you. And I'm looking forward to seeing you in the course. Thanks a lot. Appreciate it. John is asking, how do our questions get answered? John, not if you have
I'm
good.
assuming you mean during the course when you have questions.
Yeah, I am too. That was going to be my assumption. John, we answer them this. Listen, during the mastery session, the same way we had the chat box is the same thing you'll have in the mastery session. You can ask questions there. When you get your letter, your email with all the instructions, you'll see that we have a dedicated email bin for the Options Jumpstarter course at VectorVest.com, in which case you can send any questions that you have throughout the course. Right. So you have those ways to get any and all questions answered via email and via the chat box during the actual session. Kirk, thank you. Kirk says he signed up and ready to go. Fantastic. John, will you type in the phone number for anyone who needs to call?
I'm gonna put in the link for the contact us since I'm not sure where he is
Okay.
calling
All right, great.
from.
Perfect. Perfect. Thanks. Masood, fantastic. Masood is in. Paid. You got the 295 bonus. Fantastic. Alex says he is also in. Wonderful, Alex. Thank you. We look forward to seeing you. Remember, keep an eye out for that email. Give a call if there's any issues, but it's all really straightforward to get you access in here. Um, and again, the mastery sessions are a great part of this because early on, any questions, whether it's administrative, how do I get to this or that, by the end of that first mastery session, you're going to have access and understand everything that we're going to do moving forward. I'm sorry, John says he had signed up. Thank you, John. I hope I'm saying the name right. Vinay also has signed up. Padmaja. The link is in the chat box, but where you'll need to go if you want to sign up, just type in www.vectorvest.com/jumpstart. Padmaja, and that will get you in. John just typed it in for you as well. Let us know. We're going to stay on here for a bit longer. As long as there's some questions coming in, John and I will hang out. So let me know. But go ahead and log in there and let me know if you have any issues. Robin says you got an email, but not sure I got the course. Um, Robin, you should be able to go again into, and I'll show it again. You're going to type in university.vectorvest.com, university.vectorvest.com, and that will get you in there. Oh, so John, I'm not sure. Maybe Robin is a new subscriber.
Yep, so there are two emails if you're a new subscriber. One is for the software, and then the other one is for the course.
Okay, great. Okay, so Robin, yeah, you'll get two emails. So that's what, yeah. So the fact that you got that first email needs that you are in there, and that you should get the other email. If you have any issues, of course, let us know. Okay, John, I'm not sure how to answer John's question there. I don't know if you want
Yeah, that would be something that they would call the product support team
to. Yeah,
because it's about our parallels client. So
right.
they would call the product support team
All
for
right.
that.
Okay. Let's see. Robin, I would just give it a little bit for your second email. Check the spam and folder there. Otherwise, I'm going to jot your name down. I'm also going to give you the product support number you can call, and I'll jot your name down and check. My guess is it's on the way, right? The second email doesn't always come immediately. Sometimes it takes a little bit. So, Robin, I think the fact that you got the first one means the second one is most likely on its way. But I will make sure. If you have issues, we will solve them. All of these administrative things, John and I have over the years, mostly John because he's much better at it than I do. But we'll make sure that by that first mastery session that you guys are ready to go. Remember, we got six. You know what? I didn't tell you. For if you're still in the room and you're thinking about signing up, there's actually, I don't know why we don't tell them, but there's actually two bonus modules. So not only do you get the six mastery sessions, right, but there are actually two bonus modules. There's covered calls and then another one after that. So we're going to be together for quite a while, working together. All right, Robin, we'll have to figure out what's going on for you, but we'll get you set up. Yeah, don't worry. That as I was saying, that stuff we can always take care of. You're in the course. You're getting the 295, and we'll make sure you are set up properly in a reasonable amount of time. Okay. All right. I'm sorry. I'm just reading through to see if there's anything else. I know John is responding to a lot of these in the background. Kathy said she got both emails. That's great. And I'm just looking to see. Still folks here, if you've got questions on anything that we've covered, we're happy to answer. If you're still debating whether to come in or not, the only thing I can tell you is that again, it is a risk-free trade. It's a money-back guarantee. And for 295 bucks, I mean, I'll never say I guarantee you anything, but um, the cover, as was said in our one of our letters that we had gotten, that the covered call trade alone will pay for the course. Understanding how to set up a call or a put option is going to pay for this course many times over. Alexander, 11 a.m. Eastern would be 9 a.m. Mountain Time. I believe that's correct. I'm pretty sure that's it, but
Hey Jim,
yes, John.
you want to remind John here about what to do prior to each session?
Yeah, I just saw that one. So John asked, yeah, cover again what one needs to do before each session. So again, remember, John, what I was showing here is the JumpStarter course. So module one, when you see the word presentation here, this is the actual lesson, right? This is lesson number one. Okay, this is class, right? This is when you're showing up for your first session or your first class. I strongly urge you and everyone to watch that module prior to March 24th because that first mastery session will be about implementing and talking about and answering questions all about module one. So really the bottom line is there, John, is just you have access. Once you sign up, you have access to all of the modules. Right? When you hear John or I say modules, that means the presentation. That means the actual lesson. Okay. Watch that first, and then it's the mastery session that we also call an implementation session to answer questions and actually show it live in real time and all that stuff. Daniel, thank you. We look forward to having you at the course as well. Thanks for signing up. Fantastic. Glad to have you. John, can maybe help Ian out? What do you think, Ian? Ian's going to need to call product support as well.
Yes, call product support.
Yeah, Ian. Again, these administrative things. Uh, while I understand they can be annoying at times, it's nothing we can't take care of. So give a call and we'll get it done. The one thing I can guarantee you, if you're in this session and you're trying to sign up, I guarantee you I will get you. Um, I'll make sure you get the 295 price. That much I can guarantee you. Thank you, Daniel. You have a great day as well. Okay. Just going to give it a few more minutes to see if there's any other questions. Still a lot of folks in the room. If there's anything we can help with, if you're having issues, I'll give it another 5 minutes or so. John, thank you for taking the time to be here. Chester, thank you as well. We're looking forward to having you. Masood, yes. On March 24th, I will be your instructor, your coach, your ally, whatever you want to call it. John, of course, will be in with me, helping me out as well. Kathy, there you go. Kathy's going to hit the books now. Fantastic, Kathy. We'll look forward to seeing you. Oh, good, Robin. See that, John? We did go to spam, so Robin's got the second email. Be sure to check your spam or junk folder in case you're not seeing it. Niru, no, you don't need real-time data to trade options. The data you'll have through your broker is very helpful. Even the VectorVest end of day program is going to help you make better decisions. If you're not already a subscriber, you're going to have intraday. But to answer your question directly, you do not need real-time VectorVest data to trade options, and any real-time data you do need is going to be on your brokerage platform anyway. John, thank you and have a great day as well. Kirk, thank you also. You have a great day. Uh, Andrew has an interesting question. Is there a specific software module for VectorVest software for options charting and trading? No, Andrew, there's not. But we're going to talk about one of the great things about our courses. We don't go into every mainstream broker, but many of them are very similar. And so there are ways to analyze trades on brokerage platforms that we'll talk about. But in VectorVest, in the VectorVest program itself, right? We do have what's called Options Pro software, but I don't even want to touch on that. But that's something you can talk about another time. But we're going to show you how to use your brokerage platform to help with a lot of that as well. Masood, thank you. Have a great day. Okay. All right, folks. I don't see anything else coming in, John, unless you see something. Okay, Robin, you don't see the course. So,
She just probably needs to log out, essentially close out of everything, the window, and then go back in. It only updates after you log out.
okay, so Robin, if you heard that, you have to actually, yeah, and I fall into this sometimes. You have to actually log out of the universe, and that doesn't mean, and this is the mistake I always make. That doesn't mean just closing. Um, that doesn't mean just closing and reopening. You actually have to go to sign out and then log back in, as John said. And I know sometimes I mistake, logging out, just hitting the X button and then opening it back. That's not really logging out. So you should see it then. Andrew, that is correct. It is not needed for this course. Jens, thank you. Padmaja, again, I would check your spam or junk folders if you didn't see an email at this point. And if you don't see one, eventually you may just need to give this number a call and they'll take care of you. But um, it does take a few minutes, and there's a good chance it may have gone to your spam or junk folder. So keep an eye out. Lester, that's a good question. First of all, thanks for signing up. We appreciate you coming in. Um, John, I'm not sure how that would work.
I'd have them call product support and check on that.
Yeah, Lester, you might need to give a call. I mean, best case scenario. I'm sure you can upgrade that. You know, if you want to try it. I don't know if there's. I don't think there's a charge for that anyway. I don't think. VectorVest production. Oops, something went wrong. Yeah, Robin, I'm not.
Close out of that page and restart it.
Yeah, just a small pothole here, Robin. You'll be fine. I'm sure you're. If you got the email, log out, log back in, you'll get in.
Yeah, if she's in. That all of that.
There you go. There's the confirmation. Good job. All right, fantastic. You'll get there, Robin. You will get there. All right, folks. I think I'm. Yeah. Maj, I put the number in. Just give product support a call. I typed in the number there for you. John just put it in there again. It could be any number of things, but again, what I can promise you is that it's an administrative glitch right now, and that it will be fixed well before we get going. All right, all right, folks. Still a number of people in the room. Last call. You got 30 seconds to type in your next question or comment. VectorVest.com/jumpstart will get you there. Andrew, thank you. I'm glad to see that you're in and signed up. Fantastic. All right, folks, on behalf of John and myself, I want to thank you for taking the time to be here. If you're thinking about joining, that $295 price will probably be up there for a little while. If you've got to make some decisions, you can still take advantage of that price probably for a little while after I log out here. Um, Either way, remember it is money back guarantee if you're not satisfied. And if you're here because you were here today at all because you wanted to learn options, you know, we've been doing this a long time, and I think we'll build the proper foundation for you. So with that, if you have questions, again, call product support. Go to vectorvest.com/jumpstart. A lot of questions are actually answered there if you have other questions, and sign up, and we look forward to seeing you. Thanks, everyone. Stay safe, stay healthy, and we'll see you guys soon. Bye for now.